Hello and welcome to Simplicity in Stocks. Penny stocks may trade at low prices, but when they are supported by solid fundamentals, they often turn into hidden gems that outperform the rest of the stock market. But finding penny stocks that are not just overlooked but also undervalued can be a challenge. These are stocks where market sentiment hasn't caught up with the company's potential. In this video, we will look at three such penny stocks for your 2026 watch list. Please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Delta Corp. Delta Corp is India's largest gaming and hospitality company, operating casino gaming and hospitality services under the brand Delton Casinos and Hotels. The company runs offshore and onshore casinos across Goa, Sikkim, and Daman. Popular properties include Delton Royal and Delton Suites in Goa and a five-star integrated resort in Daman. At the time of recording, Delta Corp's share price was trading at a price to earnings or P ratio of 7. Disappointing financial results are partly to blame here. The company posted revenue of 1.8 billion rupees in September 2025 quarter, which was largely flat on an annual and sequential basis. Its net profit declined to rupees 241 million compared to rupees 377 million in the same period last year. The net profit was also down even on a sequential basis. To get growth back on track, the company is investing around rupees 4.5 billion in a state-of-the-art vessel that will replace King's Casino and effectively double its capacity. This new vessel will feature a curated mix of world-class gaming, gourmet dining, and more. The company is aiming to elevate the overall customer experience and thereby increase revenue. Patel Engineering. Patel Engineering is a prominent player in the Indian civil engineering space, having executed more than 250 projects so far. The company has a strong presence in various high-margin technology-intensive areas like hydro, tunneling, irrigation, water supply, urban infrastructure, and transport. At the time of recording, the share price of Patel Engineering was trading at a P ratio of 10. The financial results for the recent September 2025 quarter did not impress investors. The company reported a modest increase in revenue from rupees 11.7 billion to 12 billion. However, its net profit fell to rupees 647 million from 734 million a year back. The big overhang on the stock is the promoter pledging, which stands at 88.67%. This has remained constant for many quarters now. Any positive news on this front would be welcomed by investors. Going forward, the company plans to sharpen its focus on expanding its order book. The management is targeting rupees 400 to 500 billion worth of bids in FY26 based on its historical success rate of 15 to 20%. The company expects strong traction in hydropower and pumped storage with nearly 30,000 megawatts lined up for bidding. Large infrastructure pipelines such as the NHAI's tunnel projects and the Jal Jeevan mission, along with major state irrigation schemes, will improve its bidding prospects. HMA Agro Industries. HMA Agro Industries is one of India's leading exporters of seafood, frozen meat, pet food, rice, and finished leather products. It has good infrastructure and a strong distribution network. The company was recognized as a five-star export house by the Government of India in FY25. The company has, over the years, diversified into new product segments such as pet food, fish food, vegetables and fruits, and rice exports. At the time of recording, the share price of HMA Agro Industries was trading at a P ratio of 17. The recent financial performance of the company has been quite good. Revenue for the September 2025 quarter was up to rupees 21.5 billion from rupees 14.6 billion in the same quarter of the previous year. The net profits also jumped to rupees 898 million compared to rupees 534 million year on year. Going forward, the management has said that the focus will be on enhancing revenue through market expansion strategic tie-ups, and product innovation. HMA Agro Industries is also taking initiatives to offset cost pressures via long-term supplier contracts, freight optimization, and automation. Investing in undervalued penny stocks can be rewarding, but it comes with its own set of risks. These stocks offer the appeal of low entry prices and the potential for a sharp re rating as the business improves. This makes them attractive for investors with a high risk appetite. However, at the end of the day, these are penny stocks. Their small size, limited liquidity, and vulnerability to changes in market sentiment stand in the way of multi-bagger returns. Investors should check the company's fundamentals, corporate governance, growth prospects, and the valuations of the stocks as key factors when conducting due diligence before making any investment decisions. Happy investing.